What happened with Archegos? So UBS is known to be very risk averse. Why such a loss?
Well, this was a very unusual situation. The client had built a number of very concentrated positions in very idiosyncratic single stocks with a number of prime brokers, so huge concentration. And I think the disclosures that you would usually see in a hedge fund market-based environment for family offices or those that don't administer third-party money are very often not as elaborate and not as driven by regulators as they should be. And so the usual thing in financial markets is concentration risk, high leverage. It's the usual suspects. And we have a lot of information from that in the financial industry, in the banking industry, in those that disclose positions. But there are parts of market-based finance where that transparency is lacking. Actually, regulators haven't finished the job of rolling out same activity, same regulation. They somewhat stopped in the middle. And I think this will be taken up by the SEC and other regulators to really enforce more transparency and more knowledge. And if it's not enforced by regulators, we will enforce it because we need that information. If we finance activities, we want these disclosures. And if clients are unwilling to give that, well, there may be other banks that will give them that same exposure, but it won't be us. So we clearly are reviewing internally with audit what went wrong here. And we're not very happy with this event. It really has triggered a big internal investigation for us. But we're not subject at this point to regulatory action because we think what went wrong was various failures that interacted as opposed to a specific point where you can point the finger. And so we need to wait for the internal investigation to really give a good picture. I'm hyper-focused on this. I'm very concentrated on risk. We've not changed our risk appetite. This was not within what should have happened, so we need to get to the bottom of this.
Should anyone be stepping down because of what happened?
From what I see in the various elements that interacted, I don't see a single failure of a single part of the organization. But what I do see is that the number of combinations that interacted weren't very good. And so we need to improve each and every element of that so that those interactions don't happen again and that something like this cannot become as large an issue as it has become. But, having said that, it's been one of the best quarters. It's, we're not in the business of avoiding risk. We're in the business of managing risk. We've not managed this risk very well. And I feel deeply sorry that we did that. And I'm asking why it happened. But having said that, we have a very diversified business model. Our profitability and our capital ratios have really withstood even this test. And I think that's what it's all about when you're supervising an institution at the level of the board. The resilience and the diversity that even a loss like this can be absorbed, in my view, is an important element, but it doesn't excuse the loss per se.